Hello, I'm Bernard Hickey from Interest.co.nz and welcome to 90 at 9. This is your morning briefing where you get everything you need to know in 90 seconds at 9 o'clock. Starting now with news, the world's financial markets are all waiting for the hum of a printing machine, or a couple of printing machines actually, at Federal Reserve and European Central Bank level. The New Zealand dollar was steady at 80.8 US cents overnight and US stocks were down 0.1%, but everyone is on Fed watch and ECB watch. The Fed in the United States is due on Thursday to decide whether or not to do a third round of money printing, or maybe cut its reserve rate for banks, or maybe signal interest rates will stay lower for even longer. There's also key US jobs figures out on Friday night. And all eyes are on the European Central Bank, which will also meet on Thursday to decide whether or not it really is going to save the euro. It's talked about buying bonds, in particular the European Financial Stability Fund buying directly from governments and the ECB buying on the secondary market. The idea is to reduce the interest rates that Italy and Spain in particular have to pay for their debt. However, the Bundesbank, a key component of the European Central Bank, is opposed to this bond buying, and there are still suggestions that there may not be the political support for the European Central Bank's moves. European stocks up 1.7% and Spanish and Italian bond yields fell in expectation of this bond buying. The 10-year in Spain 6.61%, still unsustainable, and the Italian 10-year 6.03%. However, European confidence fell to a 3-year low in July, and it was worse than expected, and that saw the German 2-year bond yield, or Bund yield, fall to minus 0.08%. And that meant the New Zealand dollar rose to a record high against the euro of 66 euro cents. Now later today, Mario Draghi from the European Central Bank will meet Tim Geithner from the US Treasury, so keep an eye on that. Also, US bond markets aren't that convinced that the ECB's moves will solve the European debt crisis. The 10-year bond yield fell 5 basis points to 1.5% overnight. Closer to home, the ASB survey of New Zealand investor confidence showed a net 0% confidence in June. Term deposits are back as the most popular type of investment for New Zealand investors, back above rental property, except of course in Auckland. We'll be watching today for the National Bank Survey of Business Confidence for July, out later. I'm Bernard Hickey from Interest.co.nz.